This has turned out to be a rough year for the banks. They didn't get the 2 rate hikes that most people were expecting back in January. And now the whole industry is caught in Washington's crosshairs thanks to this Wells Fargo cross-selling debacle. However, sooner or later, the Federal Reserve is going to tighten. And when that happens, all the big money center banks will instantly become more profitable because they'll be able to get a better return when they lend out your deposits. That's part of the reason why the bank stocks have been having a nice run in recent months. And Bank of America is in particular very strong, up 33% from its lows in late June, right after the big Brexit-induced sell-off. I believe some of that gain comes from the use of new technologies to take market share from other banks and grow its already gigantic customer base. Since we're out here to examine precisely this kind of technology, I got to ask Brian Moynihan, the CEO of Bank of America, how his company's harnessing tech to improve its earnings in the face of a low interest rate, low growth environment. Take a look. Brian, we're out here in San Francisco, and what I realize is that technology is really starting to figure out and help you who should be your client, who should work for the bank, what is going on here. Right. Just talk about what Bank of America is doing to stay ahead of the pack.
Sure. So we actually moved one of my senior executives out here who runs the retail and consumer system, and he to get closer, make sure we maintain closeness. But what are we really doing? We have to be state-of-the-art in mobile technology because that's what the young people in particular, and even all people, need. That's how they interface to the public. That's how they talk. They find their news, they find their sports, they find everything. They got to find their bank. And then we got to be ubiquitous when they go into pay and carry with it. That's Apple Pay, Google Pay, Samsung Pay. Yeah. They've got to have us with them wherever they go to pay and wherever they go to transact. And so the mobile phone gives you that ability to be with them all the time. And just think of that difference between when you and I grew up, where we went to the local corner branch, and then we moved to college and we either moved the account or if because you had to, because you couldn't get any money unless you did. This now allows you to be completely, no matter where you go in life, from a kid being born today till they die, we can be their bank all the way through what they do. Whatever their job is, wherever they live, it's unbelievable.
Well, one of the things that has plagued a lot of banks that have merged is that separate systems. So if I go to California, it's different from when I live in New York, which means that California doesn't know me. Right. That's changed for Bank of America.
Right. No, that was an issue we had. So coming through all the mergers and everything, we took a look when I became CEO and said, we're going to make this one big change. We did one of the largest bank conversions ever done that nobody ever heard about by converting our California Northwest systems into our core systems, because the basic principle was you couldn't say you were one bank, one nationwide franchise, and have people walk in and actually get a different experience. But by the way, it allows us to move our mobile and online technology faster, because we used to have to develop things literally 4 times. Right. So for 70% of the customer base, we develop it, and then we had to do the California piece and the Northwest piece, and then we had the military bank, so we had to do it. Putting them all together allows us to do it. So it's efficiency and development. And when you go back to we're here in California, and technology development speed is a key. How fast can you deploy new technologies? The thumbprint, the app, the setting appointments. You can't do that across 4 things as fast as you can do across 1.
Well, your adoption is the fastest of any major bank, and a lot of it has to do with the fact that younger people don't necessarily know initially what a brick and mortar outfit is. As they get wealthier, they do. How important is this toward people deciding, I'm going to go with Bank of America versus XYZ Bank that are your competitors?
Well, I hope it's critically important because we're putting a lot into it, but it has shown to be important. So we are growing a core relationship with our customers every year, and that is a key element to it. And it's not a key element only having that. You also have to have the branches, because we have 130 million customer interactions a week. 7 million of them go into the branches, so you got to have the integration. Each week, 30,000 people set an appointment in the branches. So what do you not want to do? You don't want to walk in a branch and say, I want to get a mortgage, and nobody's there to serve you. So you tell us you're coming in for a mortgage. Now think how easy it is to run the business model comparatively, where I just don't have people walking and ask for a product that the mortgage officer's out with someone else. Right. So we can run the system. So it's an integrated model, the computer, the phone, the mobile, the branches. And that makes you unique. But if you didn't have any component, you wouldn't be competitive. And that's why we think we continue to gain share, especially among people who value that extraordinarily. And that's why it's growing fast.
They also, this next generation, the generation that's going to have all the great wealth, cares about sustainability, cares about charity, cares about whether anyone they interact with is doing good. Right. We had the CEO of Red on, and the first enterprise that she mentioned was Bank of America. This is something you're committed to, or is it bank-wide? How did it happen?
It's a commitment we have. Banks go back 230 years. So banks have always came out of their communities and had commitments to communities. The issue is, as we've gotten bigger and more global, the definition of community has obviously changed. And so what we did with Red is it really came about this idea that America has led the charge from George W. Bush and PEPFAR and Red and all the work they did to drive and eradicate AIDS and help eradicate AIDS. And it's not quite done, obviously, and there's still a lot of work to do in Africa. When the idea came up, our American, Bank of America, our teammates like to make change and make things happen. So they do stuff all over the country with 2 million volunteer hours. But what is appealing about Red, it was a chance for us to impact the global thing in a very American-led way, because America helped lead this and got the other countries behind it in a global fund. And so that was kind of the interesting appeal. And then we can activate it. So the ATMs on World AIDS Day will have Red on them and have pictures of the kids that we've done. The pop-up concerts in Times Square that we help sponsor, the food trucks that go all around, that if you spend $1, we give 40 cents donated to you. What we did in the Super Bowl a few years ago. All this was based activations that got the teammates and raised the awareness, and that's what we've been trying to do with Red, is raise the awareness that the fight is still ahead of us, and for 30-odd cents a day, you can stop a mother giving a child, passing the AIDS virus on to her child. That's a simple execution. It wasn't complex, it wasn't changing the world, it was just, can we get enough medicine?
Does it help in attracting the best people to bank?
Whether it's what we do with Red, what we do with volunteer, what we do with housing, everybody wants to work for a company they respect. Everybody wants to be with a company they respect. And as we go out and hire 2,000 young kids out of school with what they've been taught in the social nature of their being and all the things people talk about, it is important to your employer, to be employer choice, that they know that you're aligned with their interest in helping them have an impact on society.
I've been torn this week at Dreamforce because there's such great work being done with machine learning, with artificial intelligence. But are the machines also too powerful? We've had a number of people talk about cybersecurity this week, and sometimes I feel like, they've overrun the ability of humans to be able to really protect their account and protect their numbers.
Right. So cybersecurity is critically important. I've said with your colleagues a couple times that that's the one place that there's no. We're fighting an expense battle to keep it underneath the revenue. There's one place that we just do never not spend what they ask, which is in cybersecurity. But the key is to have that device secure, because if our mobile phone, if people doubted that they can transact securely, there's about 700 or 800 branch equivalent activities. So we'd have to build 700 branches again to take the activity back into the branch system, and you just don't want to do that. So cybersecurity is incredibly important. The safety, security, the belief that their data is there. And then the flip side of it is using that data appropriately. Do we let customers know that we have other capabilities they could use? Yes, but you got to use it in a way that they take you present it and they take it, as opposed to get too intrusive in their lives.
Right. Well, that does bring up Wells Fargo. If you want to make more accounts, does Bank of America reward people who work at Bank of America for the number of accounts that they open from one individual? And how do you monitor, if you do, the behavior so someone doesn't put $25 in on a Friday to open a new account, take it out Monday?
We have a great monitoring system. The teams, Dean Athanasia and Tom Gwynn, that run it, they monitor that all the time. We reward balances.
So
we also reward
you would have been able to spot 2 million different potential.
We have drive that responsive growth. We reward balances. We have what we call a stair step, and that's what we drive at. And we did that because the business model requires that we have the primary checking account.
So but you still have looked at what Wells did to be sure. I'm sure down the organization, say, listen, can we be sure we're not doing this?
Everybody's looking at that, obviously, and the regulators are asking us about it, as Chairman Yellen testified to.
You did a recent study about consumer spending, and it was pretty interesting because the younger people aren't spending the way you and I did. Can you just talk about what you discovered?
Well, so let me tell you what we saw in the third quarter in spending. It's strong. Debit and credit card spending is up 5% year to date. Total spending of all cash and everything's up 2%. So I think we're getting some share in debit and credit cards, so it might be up higher, but the consumer is very constructive. Who spends money on what is kind of interesting. A lot more movies and entertainment, a lot more experience, and a lot less things.
So it is real.
I shouldn't say a lot less things.
No, but I'm saying it's empirical now. You actually have the data which says that experiential economy is what's going on.
And that's the nature of where they spend. That could change. But in the broader context, when you think about consumers, one of the things that you saw even in jobs data today and stuff is housing still has room to go here. Not dramatic. We don't want to overbuild housing. We found out that wasn't the best idea. Right. But investment in housing and things like that. So you're seeing some shifting in that pattern. So home equity loans are being drawn to put the new air conditioning system in, put the new roof on. deferred maintenance and things like that. So when you watch consumers, they're spending on the things that they need to spend on. And so right now, experience is the thing they need to spend on, and in the broad base, and that's what they do. Housing is what older people own homes need to invest in. They do that too.
But when I hear housing, I think of the traditional things that we on Wall Street have been so bound by. How much do rates matter? How much who's going to win in November matter? Are these things to the point where it really doesn't matter what happens, or rates still are a key part of Bank of America's earnings power?
A rise in rates makes us seem a lot smarter than the world because we'll make more money. It's $4 billion plus on a core basis a year if rates go up 100 basis points, but we're not waiting for that. So we're obviously in our quiet period, but if you think about last quarter, what you saw is the expenses keep coming down and the revenue stabilize and growing, and we're growing NII, margin, net interest income, by putting more volume through, more deposits, up $60 billion year over year, more loans, and that's how you grow the business. Now, and we can keep doing that. It'd be easier if rates were a little bit higher, but that didn't happen, and we're not waiting for it.
No, I see you're not, because the bank's closing in, the stock price is closing in on the tangible book value, which is exactly what should happen given all the things that you're doing. It's Brian Moynihan, Chairman and CEO of Bank of America. Thank you so much for coming by, sir.
Thanks, appreciate it.
Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.